Home prices are going up and going up dramatically, not only in the big cities like New York, Chicago, San Francisco, or San Diego, or the resort towns like Aspin or Tahoe. Home prices are going up across the US in every city and in every town. Even before the pandemic started 2 years ago, home prices were on the rise. But since the pandemic has started, the cost of housing across the country has been on a rampage. Home prices have more than doubled in the past 10 years, making the average home cost across the US at $350,000. Last year alone, home prices have increased approximately 20%. The question now becomes, are we in yet another major housing bubble? The quick answer, no. I don't think we are. Not yet, at least. But if these trends continue throughout 2022, then my opinion may dramatically change. But before we go any further, please hit that like and subscribe button below. I would really appreciate it. Now, there are very good reasons for the huge surge in house prices. But first, I want to give credit to the federal government's efforts to stop the huge influx of foreclosures that could have happened during the pandemic. There has been an astonishingly low number of home foreclosures across the US in the past 2 years. Prices of homes across the US have had a super boost as mortgage interest rates have dropped to record lows. The Federal Reserve's efforts to protect the economy during the pandemic, the interest rate on a 30-year home loan dropped to an unbelievable 3% 2 years ago when the pandemic began and is just now starting to increase. Prior to the pandemic, interest rates on the housing market were hovering around 4%. During the 2008-2009 housing bubble, interest rates were right around the 6% area. This drop in interest rates brought more buyers into the market over the past 2 years, creating a huge shortage of homes for sale. As new homeowners entered into the market, low interest rates also opened the floodgates to existing home loan refinancing, which discouraged existing homeowners to put their homes on the market. Those two scenarios have created the low inventory scenario we now face in this red-hot real estate market. The housing shortage began during the great housing bubble with new construction. Since then, new construction home building increased at a super slower pace. Even now, across the US, we are seeing huge shortages of new home construction. The supply just can't keep up with the demand for housing. The shortage of homes not only affects new home construction, but the lower priced home market as well. Homes under $250,000 face a huge challenge for new buyers entering the market at that price range, creating a market that has multiple offers on just about every home that enters the real estate market. The astronomical increase in lumber for new builders and the chaos in the global supply chain issues thwart new construction home builders even more. The new work from home anywhere culture that was set off during the rise of COVID has only helped fuel the housing demand. Thousands and thousands of apartment inhabitants across the country's largest cities like Chicago, Boston, LA, etc., fled these cities not only for safety, but for the lower cost of living in the smaller cities. Being able to work from home and the drop in mortgage interest rates, these one-time apartment dwellers saw an opportunity to purchase at what they considered bargain prices in the real estate market when compared to the cost of housing in these larger cities. The perfect example of this is in New York. It is estimated that well over 500,000 people have left the city for these smaller towns. Adults living in these large cities where the cost of homes has typically been extremely expensive are seeing that the prices of homes in smaller towns as deals waiting to be scooped up now that they are able to work from home. To add even more fuel to the red hot housing market, a large majority of the millennial generation is now entering into their early 30s. That is an age that in the past has typically been a new homer age group that has entered into the housing market to purchase their first homes. The single family housing market, not only in the large cities, but across the entire US, should see housing demand continue to be boosted from millennials entering into the market. The cost of homes has risen so fast that they are progressively detaching from the average American household's earnings. If home prices steadily increase quicker than Americans' earnings, the affordability of new home ownership diminishes. And if the price of new home ownership gets above the amount of renting an apartment or single family home, then it would make more sense to rent than to buy a home. If you stick with this past formula to measure the economic sense of purchasing a home versus renting, real estate prices across the US seem to be overvalued by approximately 15%. Furthermore, if you look at the real estate markets in a lot of the Southwest, home prices may be overpriced closer to 20%. But just because the price of homes may be currently overpriced in parts of the country does not mean that we are in a housing bubble. But the housing market saga still continues. The best case scenario for everyone is for the red hot real estate market to slowly cool off and allow Americans' incomes to catch up with the market. Thank you for watching. Please subscribe and like below. I'd truly appreciate it. I'll see you on the next video.